So I've seen that movie play out. So I said, I want more of those and less of the failures. But mathematically speaking, those are very rare. So I built a whole process around how do I improve my batting average? How do I improve my odds of success? And so where we stand today, I have a venture capital style portfolio with 35 junior mining companies where I'm the largest shareholder or second largest shareholder of almost every single one. My entry point is sub $50 million market cap companies for my first check around that $50 million level. And the reason is, Andy, I need to see at least a 20x to 50x return potential from that first check to pay for a lot of the mistakes that will happen naturally in junior mining resource stock investing. And so if I start life with $1 billion market cap and I need 20x, I got to have a $20 billion market cap at the end, at least plus dilution to get that kind of return. So I focus on the small, but at the same time, I'm incredibly stringent and strict on my criteria that even if I'm cutting a check in a very small 50 million market cap, and most of the times, Andy, that space, you don't have all the answers at that time. There's a lot you got to figure out.
Michael Gentili, good morning to you, my friend. It's really good to see you and catch up. How are you?
Great to see you, Andy.
Yeah, well, it's my pleasure. Here, I'm really curious and I'm grateful to have you on. I really want to get you, we're halfway through the third quarter here and going into the fourth quarter. Do you have any thoughts going into the second half of the year, just in the macro sense or in the gold sense? I know we had this correction, or I'm very aware because I'm an investor, had this correction in gold. When I had you in Atlanta, you saw that as opportunity to potentially add more. But yeah, just tell me your thoughts since we've last spoke since Atlanta, and then tell me your thoughts really going into the second half of the year.
Yeah, I've been very vocal, Andy. I felt like a bit of a back in the desert again, yelling. Was the lone wolf in the desert yelling at the market when the gold price pulled back just under $4,000 an ounce. So, in Q2, obviously we had a lot of concern about Chairman Warsh. He's going to hike rates. I think the Fed fund futures almost went to 100% likelihood of a Fed fund increase. People were talking about multiple increases. I've been very vocal, almost comically vocal, Andy, about saying how I think Chairman Warsh may want to be hawkish, but he can't be hawkish due to the many
Right.
factors we've talked for a long time. But the market was definitely buying into that hawkish rhetoric, and gold prices pulled back pretty hard. From the highs of 5,500 in February of this year down to below $4,000 an ounce. We saw a bunch of things, Andy, that proved me at least correct in the short term. One, we saw record central bank Chinese buying. So the Chinese bought 20 tons in June. So obviously the central banks, we talked about that in previous interviews as well, that they're, a permanent bid in the market for now, at least in terms of rotating out of US dollars into physical gold. So on pullbacks, you have very strong physical demand, particular from China. So record central bank purchases in June from China kind of put a floor, I think, in gold at $4,000 an ounce. And then the real seminal moment for me, Andy, the pivot point for me was when you saw the US a couple of weeks ago over the weekend intervening in the Japanese yen market. And when I saw that, I got super excited. I was shocked on Monday morning. Gold was actually down that day. It was still fluttering around $4,000 an ounce. But if you read between the lines, what the American Treasury was doing was the Japanese yen's at a 40-year low. So the Japanese government central bank wanted to intervene to support their currency because their yields are blowing out as well. And the US Federal Reserve and the Treasury was worried that if the Japanese intervened by buying yen, you got to sell something to buy yen. And what their largest liquid holding is US Treasuries. And so the US government saw that they have $2 trillion of deficits. They've got about $8 or $9 trillion of debt coming due for refinancing this year. So you got like $11 trillion of refinancing you got to float in the bond market. And then you have one of your largest treasury holders, foreign treasury holders, being forced to potentially sell treasuries. So all that adds up to the 10-year bond and the 30-year bond yields blowing out to, multi-year highs. The 10-year bond at, 4.6, 4.7, the 30-year bond at 5.25. So that was flashing red lights everywhere. And that was really my view that Chairman Warsh can be hawkish, but the US government cannot afford 5% interest on their debt. So when you saw the US government buying yen to try to suppress yields in the US, that was the first signal like, whoa, this is for early innings of yield curve control. I called it yield curve control in disguise in my newsletter when I wrote that. The week after, you see Bastion, the Treasury Secretary, again coming out and saying we're going to increase the Treasury bond buying in the 30-year and 10-year bond market. That is yield curve control.
Yep.
Remarkably, They announced it on Monday or Tuesday. Gold ripped on the news. By Thursday, the bond yields were above where Bastion had said he's going to buy bonds. So the bond market was sending another signal saying, yeah, you can buy 4 billion a month, whatever you're going to buy. That's not enough. We got 9 trillion to refinance here. So all that to say, Andy, is that it's clear now to the market. That's why gold has rallied from 4,000 to 4,700 dollars an ounce as we speak today, because the bond market, the gold market's now discounting the hawkish talk and saying, look, you want to be hawkish, but what you're actually doing with your interventions in the currency market and your local bond market is telling you you need to cap rates. And I think we're going to see a heck of a lot more intervention in the bond market because the refinancing wall and the debt wall and the deficit wall are so big. The numbers have to get a lot bigger if they're actually serious about capping rates. And they absolutely do have to cap rates if they're serious about floating the budget of the US government. So long answer, but it gives you a bit of an idea of why I was so bullish on the pullback. I had a record Q2, Q1 for me in terms of net deployment of capital into the sector. I had my shopping shoes on. I invested big checks in some new deals and supporting existing deals because that opportunity to me was a gift to have a pullback of that magnitude in what I think is a structural multi-year bull market here.
Yeah, well, hey, you know what? I'm really, really pleased that you talked about that because I think that is why I had Tom Luongo on the show probably 3 or 4 weeks ago, and we actually talked about exactly this. And it started, if you would, and I'm simplifying what you said, the yen carry trade. What's interesting to me is just forward thinking, and it's exactly what you just said, but I'll just reiterate I anticipate more bond yield control, just really directly from it, which is Q quantitative easing, right? It's money printing, just buying the 30 and the 10. And if that is happening already, but I see that coming up even more. So correct me if I'm wrong.
Yeah, that is the overriding thesis is the only way to float the boat is massive amount of money printing. So when you're talking about being hawkish, it's not realistic to have that juxtaposition. If you can't float your bond market and your bond yields are out of control and the deficit's out of control and the debt's out of control, the only way to do that is money printing. So while you're intervening in the Japanese yen market, whether you're buying 10, 30-year treasuries, where you're formally announcing QE, whether you're capping yields, whatever steps they take in the future, which I think they're going to do all those things, are just wildly bullish for gold. And so
Y-
that's what's taken us off the lows here. And another thing I'll say too, and it was shocking to me, Andy, how negative sentiment was. So if
Yeah.
you go back a couple of months, I mean, the sentiment was about as low as it gets. Like the Huey sentiment was like zero. Gold miners index was zero. I think the sentiment in the physical market was like minus 20. They're off the charts, like multi-decade lows only happen every 4 or 5 years. You see that kind of sentiment, which was incredible to me, given that gold was at $4,000 an ounce at those levels. So the industry's still benefiting from record profitability, record cash flow, just record fundamentals, and you had this massive negative sentiment. So that's why it was a bit of a cold spring when gold bounced off 4,000, didn't go below 4,000. That's why the stocks have responded so well because the sentiment was just terrible. The stock's been sold off so hard that there was a great pent up demand for the equities when the sentiment turned.
Yeah, and I'm glad you brought up that point. One of my biggest key indicator, and I'll call it an indicator, is sentiment. When people are overly bullish, I get very afraid. It's Warren Buffett, right? And when people are way too pessimistic, at least I get very interested. In fact, oftentimes I get greedy, buy low and sell high. I just also just talking to the investment group that I'm here with Atlanta, they were discouraged almost, and this is a good thing. And just the people that I talked to, it was just this, what's going on? And yeah, they were just down. And that's anecdotal, but I don't think it's anecdotal in the broader market, what you just said. So
Absolutely.
let's talk a little about a lot of the viewers and listeners. They're not only gold holders or precious metals holders, but what they also are, they're mining stockholders, and they want that as again, I don't want to say safe, but an interesting to place allocation, but also to get leverage to the gold price and the silver price. When I met with you, and you've said it before on the show, you talked about your methodology. If you can talk about that again, because I think it's very different. It's similar, but you added to it. But you use it as a yeah, well, I'll let you say it. But yeah, just talk to me about your methodology when you allocate capital, what you look for, and how and all of that.
Yeah, so for your viewers that don't know my background, I spent 18 years and still am today, about 25 years now, institutional money manager. So managing, pensions, high net worth clients. So that kind of that blue chip kind of approach to investing, risk control, portfolio construction. So when I took the leap into junior mining in 2018 and started investing my own personal capital aggressively in the space, that I want to do this in a thoughtful and methodical way. I think too many people, Andy, use the junior resource market as a substitute for a casino. They view it
Hmm.
as just wild speculation, put some money on red on the roulette wheel and hope you make a buck. Not very well researched market in terms of microcap junior resource stocks, very inefficient, which I love as a stock picker, but also not very thoughtful investors' approach to it. And so when I look at the junior resource sector, I said this reminds me a lot of biotech. It reminds me a lot of early stage tech in Silicon Valley. This really requires a venture capital model. You have to have a disciplined, diversified approach to investing. And I'm a big believer in concentration. I'll explain to you how I'm concentrated yet diversified in my portfolio. But when I attack, I said like I can't just own one or two names because mathematically speaking, Andy, if you take
Yep.
the 1,000 names on the Toronto Stock Exchange or 2,000 names on the Toronto Stock Exchange and you just put them all on a spreadsheet, you'd be lucky if 5 or 10 of them actually become mines out of
Hmm.
2,000 names. So your odds of success are pretty low going from a discovery to production or pre-discovery to production. So I asked myself but if you do find one, they go up 50, 100 times your money. And I've been very fortunate and blessed in my life to be around many stocks that have gone up 50 to 100 times. So I've seen that movie play out. So I said, I want more of those and less of the failures. But mathematically speaking, those are very rare. So I built a whole process around how do I improve my batting average? How do I improve my odds of success? And so where we stand today, I have a venture capital style portfolio with 35 junior mining companies where I'm the largest shareholder or second largest shareholder of almost every single one. My entry point is sub $50 million market cap companies for my first check around that $50 million level. And the reason is, Andy, I need to see at least a 20x to 50x return potential from that first check to pay for a lot of the mistakes that will happen naturally in junior mining resource stock investing. And so if I start life with $1 billion market cap and I need 20x, I got to have a $20 billion market cap at the end, at least plus dilution to get
Hmm.
that kind of return. So I focus on the small, but at the same time, I'm incredibly stringent and strict on my criteria that even if I'm cutting a check in a very small 50 million market cap, and most of the times, Andy, at that space, you don't have all the answers at that time. There's a lot you got to figure out
Yep.
size of the resource, the metallurgy, just the economics, all the social engagement side, the funding. So a lot of things you don't know yet, but I try to reverse engineer using my 25 years experience investing and producing commodity companies. Say, what are the hallmarks of mines? What are the hallmarks of successful commercial mining operations? Superimpose them on a very small company. And if there's
Hmm.
any red flags along the way, I'll say no. I get this feedback all the time from, I guess, angry CEOs who I say no to. But my stock's going to go up a lot. Like, don't you see? Look at all the catalysts I have. Look at the promotion I'm going to be doing. Look at the news flow I'm going to have coming out. I'm like, terrific. I agree with you. Your stock is going to go up. I only make money if that company goes from a 50 million market cap to a producing mine or an asset that a big major mining company wants to acquire one day. So if there's anything that doesn't fit my criteria, I'm saying no. I own these stocks for 5 to 10 years. I'm getting married to them. My deal with the companies is I'll buy 1% of my net worth on the first check, up to 1% of my net worth on the first check, and I'll support you in the next 4 or 5 financings. So I'm signing up for a lot of support, a lot of investment in those companies. And so I have to be comfortable that these companies have what it takes to go all the way. And most companies don't. So that's my model. There's lots of stocks that go up 20, 30, 40 times. And there's some that go down 70, 80%. That's part of the process. That's why I hate the question from investors. Even at your conference, I still get it, Andy, which is like, I know you have 35 companies, but what's your favorite? Tell me your favorite.
Right.
Right?
Yeah.
I'm like, I got 5 kids. I love all my kids. They're all different. They all have different upside, different characters, but I can't tell you in advance which of my 35 are going to go all the way. I think they all have potential to go all the way. Otherwise, I wouldn't be in my portfolio. And some
Right.
move faster than others, and some get more probability along the way. But you really have to have a structured, diversified approach. I also use an analogy in the talk I gave at your live at your conference this year, Andy, about watering your flowers and pulling your weeds. Most investors do the opposite. They pull their flowers and water their weeds. So
Yep.
you want to feed more capital to the winners. I got one, North Isle Copper and Gold. It's gone from 14 cents to 4.50. It's one of those rare beasts that's gone from really early micro cap to a stock that the market's fully embracing as a future mine. I invested in like 6 or 7 financings along the way, Andy.
Right.
14 cents, 40 cents, 60 cents, 80 cents, $2, $3 a share recently because the story kept getting better. They kept proving that this is going to be an economic deposit. And I was pressing my bets. Whereas most investors, you buy stock at 14 cents, it's at 25 cents or 30 cents. Hey, double my money, I'm out of here. But that's actually the one that I think is going to go all the way. And it could have been a 40 bagger for you, but you sold it up 100%. And then you bought one stock that 30 cents that's not doing well, your results are terrible or it's not working out, and you doubled your bet or tripled your bet at 10 cents. That's now 2 cents or zero now. And so you see how a lot
Right.
of investors' portfolios end up with a lot of weeds and a lot of frustration. And I'm not saying just because the stock is up that you buy more. You buy
Right.
more if the stock is up and the value that they're creating, the end prize, they're finding more gold, they're finding more copper, they've put out a great study, they've got partners in place or streaming partners in place. The value is getting bigger, so your target price is higher, right? So it's all
Right.
about risk and reward, opportunity cost of capital, and when to press, when to not. Most investors get that wrong, which is why at the end of the day, their portfolio looks like they need a big gardener to come in and clean it up. So having that discipline up front, knowing what you're doing before, why you're buying, why you're selling, when you're buying, when you're selling, take the market noise out. That helps a lot. Like, why was I so aggressive buying stocks in Q1 and Q2 when the market pulled back? Because my stories kept increasing in
Got
value,
better.
but
Yeah.
the stocks were down 50%. I was like, you're at a 50% off sale, a Boxing Day post Christmas sale at the store, and you have the stuff products that you love 50% off. You want to buy more. So
Yeah.
that's the discipline that having a plan gives you versus being just beat up by the market sentiment, ups and down like a yo-yo. That's what a lot of investors react to that, and that's why they get in trouble as well.
Yeah, no, well said. And it reminds me, you said 15 minutes ago, just the inefficiencies of the market. So if you can understand that as well as exercise discipline, if there's the story is getting better in a junior mining company, yet the stock comes down, that's a great reason to buy. But just because a stock's down is not a great reason to buy. Just as if the story is getting better on the way up. And it reminds me of Jesse Livermore on Remnants of a Stock Operator. He would ride the winners and cut the losers, right? And
Mhm.
that's actually really hard to do. And if you're not disciplined at it, but if the story keeps on getting better, again, that's the inefficiencies of the market in junior mining, correct?
Correct. And because I have such big positions and I can't exit on a whim, or nor do
Right,
I want to. It
right,
helps me. It helps me stay in the pocket, right? So I'm forced to stay in the pocket, but it also helps me, Andy. I'm obsessed with exits in the sense of I'm obsessed of what my investors like. I have a spreadsheet with all my stocks and what the market price is, and great, making new highs this week. It's been a great month for my portfolio, but that's not real money until I know that there's real exits for those companies. Because I'm like a private equity guy. I only achieve liquidity when my companies are sold or they're on the TSX main board and trading, two, three, four, $5 billion market cap and trading millions of shares a day. So for me, I have a price target in mind of every stock in my portfolio. There's a market price and there's what I think it's worth in 2 or 3 or 4 years. And there's a plan to help that company achieve that potential, all the
right.
strategic things that has to happen to get there. So I have a market value for my portfolio, I have a future value for my portfolio, but the future value is what I focus on. And then when there's too big enough disconnect between future value and current value, that's when I'm doubling down or tripling down the investment. When it gets really close to my fair value estimate, that's probably when I'm starting to talk about strategic things. Is there an M&A we can do with potential buyer? Is there, more deals that can be done in the camp or whatever that can be happening to create that exit? So I am very focused on my selling price. I just can't sell. So I'm doing all the work I can in the background to lift the value of these companies, create value of these companies, to put them in a place to be able to be sold. Versus most investors, like, oh, it's up today. Should I sell? Should I buy? It creates a very short term mentality, which when
Mhm.
you're short term, you're going to get some decisions right, some decisions wrong, but it's going to add up probably to net zero over time. If you focus on long term value, I think you can create serious wealth in the space.
Got it. Okay, so here's a question for you that I'm starting to get asked to all the time. We actually have a younger audience as well, that people that are young coming into this audience. And I know that you have kids, and I have kids, and my daughter is actually has her own portfolio of junior mining companies, and she's actually done over time, over the last 4 years, quite well. And again, there is some timing involved, meaning she got it when the space wasn't
Cycle.
really being talked to. So she has all that, but my question is, we have a young lady that's working with us now. I believe you met her, Tiffany. She started out an intern with us, and now she's full time with us. She just asked me the other day. She's young. She's developing a methodology, but she just asked me, "Hey, I want to start investing." and she doesn't have a Michael Gentile money, and she doesn't have Andy Millette money. What would you say to that person, that younger person, or even if they're older, that wants to start being in this space but doesn't have your portfolio size? Should they concentrate on just, obviously they can only do a handful of companies, if that, but yeah, what should they do as far as allocation and making decisions?
Well, to give those people optimism and hope, I started with $5,000 when I was 16 years old. Like I didn't come from money. I didn't have any money. My parents had no money. I bought my first stock at 16, discovered a stock market at 10 years old. So the fact that they're young and already investing in the stock market is terrific. That
Mhm.
is probably the best thing they can do for their long-term financial security. I've talked in other interviews, everyone's aware of inflation. You talk a lot about debasement, and your younger viewers, your older viewers know anything that they need to buy or want to buy is every year more and more expensive. And so
Mhm.
if you're just relying on your salary to keep up with inflation, you're probably getting poorer every single year because the cost of things you actually need are going up more than your base salary. And
Mhm.
so the only way to lift your head above water and to actually increase your level of standard of living, increase your financial wealth, is to have the money working for you and compounding at a higher rate than inflation. And the stock market and America being a very productive and ingenuous country creates wealth, and that creates wealth and that creates future compounding. So having your money compound at 10, 15, 20% a year, depending on the risk tolerance that you have, and putting money away early in your 20s is actually so much more significant than getting a $20,000 raise when you're 45. Right?
Mhm.
It's just that, so that great for them to start investing. Everyone should start investing. I'm encouraging my kids to start investing. Pay yourself first. Take 20% of the salary they're making at your shop, Andy, and put that in a savings account. Don't see it, put it away. That's terrific. Second thing I'd say would be, yeah, junior mining stocks are like, for skiers, double black diamond stocks. So if you're just starting out,
Yeah.
your first day on skis, you may not want to do the double black diamond run right away. So watch your videos, learn from some sophisticated investors, get your feet wet, get comfortable. Maybe you start with an ETF or the SP 500 or the GDXJ or something diversified until you get your skis under you and you get comfortable, buying stocks. And so you don't want to put all your money in the market and then buy one junior mining stock and it's down 80% and you wiped out all the work you spent accumulating money. So, but there's a terrific amount compared to when I started, Andy, at 16, like 30 plus years ago. Tremendous more amount of resources right now out there for investors who want to educate themselves, both in YouTube and online and AI. So you can really go up the learning curve really quick if you're willing to invest the time. And but the first battle's already won. If they're saving money, they're in the small fraction of like 2% of their age category. They're actually putting the money away for the future, which will put them in a very good position.
Yeah. I told Tiffany and I told my daughter, and I give this, it's what you just said. First thing, save money, spend less than you have. Number one, start investing, and then really just invest in yourself first. And that just, and put in the work. Invest in
Mhm.
yourself first, and that's just becoming educated in this space, but just about investing. I want to talk specific spot stocks, but before we do that, you have a newsletter and you always give updates on your holdings, your portfolio, and stocks that you like, that sort of thing. How can my viewers and audience be a part of that?
Yeah, I started a newsletter about like 35 weeks ago, Andy. It's every Saturday at 7 a.m. It's not investment advice. It's not recommendations. I don't answer emails on do you like this stock or that stock, but I get so many questions you might imagine, Andy, as what do you think about this company? What about this company? What's going on with this company? So what I put in my newsletter is interviews like this. So all the YouTube podcasting I do in a given week, investors can catch up on that. If there's big macro noise like there was, 3, 4, 5 weeks ago on the yen market or intervention in the treasury market or hawkish sentiment from the Fed, I'll write, short commentaries on my views of macro, what I see happening. And then any news that comes out in the 35 companies where I'm an investor in that week, I'll attach the press release and write a short blurb, translating it basically into English for investors in terms of the geology or what I see happening there. So it's a great way to keep up to date on any company that I own. If it's in the newsletter, I own it. On my views on the macro basis and catch up on any videos that I put out that week. It's SaturdayMorningMining.com. SaturdayMorningMining.com. You go to the website, you type in your email, and you're subscribed. It's completely free. I don't charge any money for it, and it's a great way to keep up on the work I'm doing in the space.
Excellent. And Colby, our producer, will put that in the show notes, both on YouTube, Apple, and Spotify podcasts. Michael, let's talk about some stocks here. And again, this is not investment advice, and do your own due diligence. But these are just some names that I am interested in, and I'm curious of some names that you have, Michael, that maybe I'm not going to share with you or ask you about. Let's start first with Astra Exploration. Just a full disclosure, I own them. I've met Brian. I've been friendly with Brian. Brian was down and I met him again in person. I met him twice here in Atlanta, once at my conference and then with you when I first met you in person here. Love the story in Argentina, but tell me about them. Give us an update and your thoughts. And I believe, and well, I won't say that. I think you allocated more money to them. So obviously, if you did, that story is getting better. But tell me about them.
Yeah, I'm the full disclosure largest shareholder of Astra. I think I own 17% of the company, or 15% now post the recent financing. And yes, I participated in pretty much every financing in the last 5 years. Brian is terrific, the CEO. What I like about Astra is the combination. I talked to your conference, Andy. Management ownership, board ownership, very strong technical team, and also savviness around capital markets and strategy. So they got all the human ingredients to be successful. Obviously, you need geology and Mother Nature as well to cooperate to give you an economic deposit. They got a high profile new project in Argentina called La Manchuria. Lots of high grade shallow intercepts, which is a good combination, high grade shallow. They've been drilling out, 60, 70-meter gold intercepts, 500,000 gram silver intercepts pretty consistently over an increasing footprint. Stock took it on the chin the last couple of weeks, and they put out some more really good drill results, which I thought, in my view, more of the high grade shallow deposit, showing that that footprint of the high grade shallow material is expanding, both parallel to the south and to the north. But the market was disappointed. They have a second target, Andy. So they have this high grade shallow footprint, which I think is, 500,000 to 1.5 million ounces potential for like a high grade open pit, very economic
Mhm.
surface mineralization. But they were also targeting the feeder zone, they were calling it. So these high grade shoots, there's a lot of them at surface. There was a theory they were converging at depth. They had really good indications that it was converging at depth. Unfortunately, these last results that came out, there's something called andesite, which is another kind of rock type stratigraphy that basically cut off the high grade mineralization. And so that those shoots, they may continue elsewhere or be appear lower down again, but
Mhm.
that kind of cut off the 10 million ounce super target that Brian was looking for. Those are obviously extremely rare, and that's more blue sky type potential. So the market being the market, threw the baby out with the bathwater. We had great high grade shallow results. That continues to get bigger, moving in all directions. But there was some disappointment on the convergence deeper shot not hitting this round. And so the stocks, basically been cut in half from like 80 cents to 40 cents Canadian. Companies very well financed, got about 13 million of cash on a 50 million market cap. Has the Manchuria project in Argentina, which continued to get more drilling because that high grade surfaces look very attractive. And they've got two pretty exciting projects in Chile. The market just was not paying attention to that the company may be advancing in the months ahead as well. So, feels like an overreaction to me. But I understand the market, was looking for the big moonshot, didn't get it, and now is overreacting to the downside here a little bit, in my view.
Yeah, I got it. And that could be an arbitrage, or it could be, I say that very clearly, could be an inefficiency potentially in the market. That's, again, another reason why we're in this space. Talk to me about Maple Gold. I think the world of Kieran. I think the world of the project. I think Kieran's done a fantastic job. Since he's become in leadership of really executing on the vision and the mine, and they're a bigger project and they're a known project. So, but with plenty of exploration upside. Just my 2 cents. But yeah, give me your 2 cents on Maple Gold.
Yeah, I love Maple Gold here. I think Kieran and the team have done a terrific job, resetting the management team and board and just putting all the right people in the right chairs to have a lot of success with the company. It's been a phenomenal 12 months for Maple. Quite honestly, Andy, I'm surprised that the stock has not reacted better to all the good news the company's had, and we'll fix that. I mean, I'm bringing Kieran and Astra and four other companies for a 5-day roadshow through Europe coming up in October. And so I think it'll be great to introduce Kieran to a much larger audience of European investors. And so we'll have a lot of FaceTime with a bunch of new pools of capital in Europe for Kieran to talk to. Yeah, Maple's where we stand today. New resource, 5.2 million ounces in the resource category between
Nice.
Gentile
Yep.
and Douai. It's a very rare to have over 5 million ounces in Quebec, as you know, Andy.
Hmm.
But what really has me excited is Joutel. So Douay is great. Douay is 4 million ounces ish, gram-ish material, open pit, potentially much, much bigger. Joutel is sort of the hidden, surprise or value in this company the market doesn't really understand. Joutel is already maiden resources got put out 1 million ounces of underground high grade material in that 4 to 5 gram category. It's got two shafts already going down. It's got lots of underground workings. For your viewers' benefit, Joutel was the first mine behind Agnico. So Agnico Eagle, the world's largest gold company, when they were a microcap junior, like we're talking about today, this was their first producing mine. And then they found La Ronde, which is their flagship mine. And when they found that, they walked away from Joutel because La Ronde was like 50 times bigger, and that's still producing today as one of their flagship operations. So they
Mhm.
kind of left Joutel half produced and walked away. And that gold was $35 an ounce back then. So back then they were mining like 15 gram material, and anything else under that was sort of basically below cutoff. So they
Think
left they
about
left
that.
about 1 million ounces behind at 4 to 6 gram material, which today is really high grade, really juicy at $4,500 gold prices.
Right.
What's really got me excited, Andy, is the combination of Joutel. When you take 1 gram bulk tonnage material at Douay, say 4 million ounces at a gram, and you layer on, million, 2 million ounces at Joutel of 4 or 5 gram material, that's how your economics of a mining project really starts to sing because you're blending high grade with bulk 1 gram material. So if you look at the last press release, again, the market didn't react. More good results from Joutel, but in the press release, Maple said they're going to drill 25,000 meters additional drilling at Joutel. It reminds me a lot of Radisson, another name we both know well,
Yep.
which is a former high-grade, past-producing mine that was sort of left behind in $35 gold price environment, has not received any drilling for decades. All of a sudden, Maple's drilling Joutel going, wow, this thing's a lot bigger than we thought. And so if you can take Joutel from 1 million ounces to 2 million ounces of high grade, it could be an interesting standalone project on its own.
Yep.
You couple it with Douay, though, that really starts to paint a very high quality economic picture. And the stock today at 5 million ounces, around 180 million market cap's got about $30 an ounce Canadian in the ground, like sub 25 US per ounce in the ground. One of the cheapest stocks on the comp sheet, despite having now an A plus team, compelling growth opportunity, and an emerging, in my view, economic model to develop the Douay Joutel complex together. So really feel excited about it into the new year, into this back half of this year, into next year, and I think the market will start hopefully waking up to the value that's being created at Maple here.
Yeah, and they're right on the fairway too, in Quebec, with infrastructure, all of that. And correct me if I'm wrong, Agnico is, don't they own some of the stock, don't they?
Yeah, Agnico's a 15% shareholder, has tons of infrastructure in the area, including Malartic, which is a 50,000 ton per day mill, and other mills in the area. Has all things I look for, power, roads,
Right.
workforce. Maple owns its own camp, so get your drill costs down. It's really well set up, and the company's very well funded, by the way. I think they're funded for another 50, 70,000 meters of drilling here going forward, and Joutel is the first big slug of that. So I think you'll see a really accelerating awareness of the company in the market in the months ahead, in my view.
Yeah, fantastic. Okay, let's talk about Big Ridge. Big Ridge was down in Atlanta. We had several of my friends here in Atlanta. At least they told me they were buyers of Big Ridge. They really liked the project. But give me an update on them, where they're at, and why you still own them.
Yeah, Big Ridge was part of my wild Q1, Q2 shopping spree, Andy. So I was already a 10% shareholder of Big Ridge for a couple of years now, many years now. But I've been really pleased with the progress they're making in de-risking the project. I think this project is much, much closer to producer status than the market believes. And there's a bunch of reasons why. One, the environmental and permitting pathway in Newfoundland is very favorable. You can get permitted in like 12 to 24 months versus,
Right?
5 to 8 years elsewhere in Canada. Market does not appreciate that. We have an upcoming metallurgical studies and PEA results that'll be coming out, in the next few weeks. I think metallurgy should be shortly, the next 1, 2, 3 weeks, and the PEA should be in September. That's going to put a real marker on the project. Andy, this project has, just look at the resource, 1 million ounces of 2 gram open pit material. That
Hmm.
is extremely rare. Most open pits are well below one now in
Right.
Canada. So that's really favorable. And they also have underground potential. And by the way, the deposit is wide open. Mike Bendrosky, the CEO, has had his handcuffs on for 3 years, not being able to drill the project based on basically my instructions because the mark cap was so low. I didn't think it was justifiable spending shareholder money to drill when you were getting $10 an ounce in the market. I doubled my investment in the company from 9% to 20% on the last. I gave him about $6 million One, to accelerate the permitting and the pathway to get that production path moving. And two, importantly, Andy, to start drilling again, because we're seeing some really exciting indications that the core deposit at Big Ridge should be a lot bigger at Hope Brook. So we got some holes going in the ground as we speak now. And there's a lot of parallel expansion potential that's never been tested that we want to see that also get drilled out. So we have two pathways here. De-risk what I think is going to be a very profitable, high-grade open pit in terms of permitting, economic studies, showing the market there's a path to a quick production outcome there, while at the same time, like we did at Radisson, show the market this project's actually way bigger than the market believes. And Big Ridge will also be coming to Europe with me, and that's a story that's been really not marketed well. Not Mike's fault. We've been having not spending the money on marketing focused on internal improvements. But now it'll be kind of the coming out party, I think, for Big Ridge in Europe, where investors get to see all the progress the company's made. Hopefully, the economic studies are out by then, and market will get a really good picture of the value being created at the company right now.
Fantastic. One of the last companies that I have, then I want to talk about what you have, but On Gold with Kyle, met him in Atlanta, really thought the world of him. And also the project, but yeah, give me an update on Gold and just where things are at currently.
Yeah, so on gold, Kyle Stanfield's done a terrific job. So the business model on gold is, look for exceptional geology in projects that have had challenged social licenses. And so, as you know, in many parts of northern Ontario and northern Quebec, the Indigenous First Nation relationships are a little challenged. And so you have really good geology that's really been sparsely drilled or sparsely worked on due to lack of consultation and lack of engagement with First Nations in a positive way. Kyle's background is 20 to 30 years of direct First Nations engagement. So he's got a real pedigree in that, a gift for that. And
Mhm.
so in a short period of time, the last 2 years, Kyle's been successful at opening up our Manitoba project, the Monument Bay in Manitoba, for drilling. It's a historical non-43-101 compliant resource, around 2 to 3 million ounces. We're currently in the process of bringing that up to snuff. Hired SRK, which is a world-class resource engineer, to do the resource study, resampling. So that'll be a modern, reliable resource for Monument Bay. And Kyle's been able to turn what was basically a semi-hostile relationship with the First Nations with the previous owners to a very impactful, engaged relationship. We've got an exploration agreement, and the community is on board for ONGold to move this project forward. So that's a huge, huge win there. Value creation without drilling, and also doing good technical work to get the resource out so the market can really rely on those numbers. The second step has been in Ontario, TPK. This is a geologist dream, tier one fantasy type discovery you could make. There's really high grade gold, really high grade copper. Like, it's been on my wish list to drill this for 10 years. But again, the First Nation relationship was challenged, and Kyle was the first CEO to get an exploration agreement with the Vivek, one of the communities there. And we put a press release out this week showing the hot sniffs we're seeing at surface from sampling and boulders and grab samples. We'll be moving to drill that in the fall as well. So it's in slow and steady in the background, Andy, but the value being created with those relationships and access to those projects should result in hopefully meaningful value creation for the company in the years ahead.
Okay, fantastic. You are going to London, and again, bringing some companies with you to London. But tell me about London first, and then tell me about just some of the other companies that I haven't asked you that you're excited about.
Terrific. Yeah. So, as you mentioned earlier, I get a lot of questions like your viewers ask you, Andy, what does Michael think about this or that? And so I've started the last couple of years to try to get some conferences or gatherings together where investors can see all my holdings. I'm not getting in the conference business. I don't make any money off this. But what I try to do is get all my holdings in the same room. We did one in Vancouver in January of this past year during VRIC. We had all 35 of my portfolio companies in Vancouver for one day. Investors could do one-on-one and group meetings, basically see my whole portfolio in one day. That was very successful. So this year in London, England, on October 19th, we're hosting a one-day forum, we're calling it, with my 22 top dollar value holdings in one room. I'll be doing keynote presentations at breakfast and lunch, and you can do one-on-ones with my companies all day. That's October 19th in London. And then because I'm in Europe and it takes a while to get there, I'm continuing on for 4 days with six of my companies to Paris, Frankfurt, Zurich, and Munich. And I'm doing a six-company roadshow, again, lunch and one-on-one meetings in the morning, a smaller format, but in all those cities, more intimate setting for those next 4 days. So the six companies coming to Europe with me for the 5 days, we talked about a bunch of them already. The only other two we didn't talk about are Silver Crown Royalties, which is a compelling silver royalty model. I think has wild open-ended growth opportunity. And then Cascadia Minerals, which is a terrific project in the Yukon, copper, gold, right next to Selkirk Copper. I mean, people love the Yukon right now, Andy, but one problem with the Yukon is the lack of infrastructure.
Yep.
Some are very remote. It's going to cost billions of dollars to put the roads, the power, the ports in necessary to get the gold out or copper out in different cases. This one is next to a past producing mine. So it has the power, the roads, the mining camp, the airport's already there. And the company's been putting out terrific drill results recently showing the deposit's getting even bigger, which I think is pushing it, in my view, towards a highly economic kind of build me now type project. So it's underfollowed. Silver Crown, same thing. Market not really aware of Silver Crown. I don't do many royalty investments in the space. My first royalty investment, I wrote a huge check into Silver Crown, 100% silver royalty company, very unique and rare in the market with a large open-ended opportunity in my view. That 50% of the world's silver, as you probably know, Andy, is byproduct silver. So most of silver produced globally is actually an afterthought. It's a zinc mine or
Yep.
it's a gold mine with a little bit of silver. And so Peter Burris, the CEO, is going to these companies saying, "Hey, 1% of your revenue is silver. Why don't you monetize it? We'll create a custom royalty on your project. You can pull forward cash flow and you can participate in the future upside of silver by owning our stock." And there's a
Mhm.
really long list of acquisition opportunities ahead. And unlike most companies in my portfolio, or actually none of them, Andy, Silver Crown actually generates free cash flow. So they're actually a
Yep.
profitable business today. They don't need cash. They're not building any mines. And so every quarter, every year, you'll be stacking free cash flow, starting to pay dividends. So I think it's a really interesting way for investors to play silver with a lot of torque in a lower
Mhm.
risk way than owning a junior that has a lot more volatility.
Yeah, and I believe I met Peter in Atlanta when he came to Atlanta. Correct
That's
me if
right.
I'm wrong. Yep. Yeah, any other company? And by the way, I'm if you would have me, and this is not a promise, but I'm very highly interested in London, I could potentially come see you if you
You're
wanted
more than
me.
welcome. Any active mining investor in the space, and I know you're a very active one, Andy, is more than welcome to join us. So for your viewers that are, allocating decent capital to the junior mining space, you're more than welcome. And if you want more information on the conference, you can just go to my newsletter. Every week I have a link in the newsletter to sign up to put your name on the waiting list to be registered, or just have more information on the logistics and who's coming.
Okay, fantastic. Any other company names that are interesting or that, and I don't want to say it that way because they're all interesting to you, but I guess that are at the top of your mind.
Well, I think it's hard with a portfolio like I have to talk about one name or two, but I would say there was very topical news in Radisson Mining. I think Radisson was also in Atlanta at your conference, Andy, so your viewers would be well aware of it. Radisson put out some really big news this week.
I
The
just saw it.
56 or $57 million investment from Agnico Eagle into the company for a 10% stake in Radisson. I've said many times publicly and on your show as well, Andy, Radisson is a terrific project. It's got 2.3 million ounces, I think, going to four in the next couple of years with the drilling program that we're doing. But what the project really has is a gift of high grade and
Mhm.
proximal to four mills, producing mills in the area within 75 kilometers. So I always said that highly likely that Radisson's ounces end up in someone else's mill. There's huge synergies there. I think Agnico's investment shows that one of the four mills in the camp is at least interested enough to take a big position in the company. And that'll start to allow investors to kind of model out what those ounces could be worth in future production scenarios in Agnico's mill or someone else's mill in the future. And so it's a big validation. The market reacted very well to it. We got lots of questions in the past, Andy, about well, if your story's so great and all these mills are in the neighborhood, why hasn't anybody bought a stake in Radisson? Well, I think that
Yeah, you just
investment
did.
answers the question. And I think Matt Manson's team's done a terrific job there, and I think these ounces are highly valuable and very creative to anyone in the future that has a mill in the camp.
About Radisson, the first introduction, when I say introduction, the first time I've listened to you and saw you was on the Kitco interview, and you mentioned Radisson as one of your core holdings. And my daughter and I both, and she still has them. I don't, regretfully so. I made a lot of money on them. I made a lot of money on them, everybody, but I regretfully don't hold them anymore, but she still does. But that's my appreciation to you. That was turned out to be a winner. That all being said, I remember when I did bought it, it just like in junior mining, I want to say it got cut in half on great results. So just, that's the world of junior mining that we live in. So anyways, that has I give you my love and appreciation for Radisson and introducing me to them. Michael, again, if people want to sign up for your newsletter, how do they do that? And how do they get more of you?
Yeah, so SaturdayMorningMining.com. Every morning, 7 a.m. Eastern, you get a little love letter from me in your inbox and easy to keep up with the work I'm doing in the space.
I
SaturdayMorningMining.com.
I get it, and a lot of my friends here in Atlanta get it, and we discuss it here in Atlanta. Michael, as always, it's great to catch up with you. Great to see you. I'll give you one. I'll leave on this one story. I was having a conversation with one of the companies I'm doing business with, and they were seeing all my guests that I interviewed, and they said, Michael Gentile, the mysterious Michael Gentile. That was what they said. They gave me a good laugh. Oh, wow, you have him on. So I'm going to send him this interview because they'll get a
Makes me
kick out of
sound a
that.
lot cooler than I actually am, Andy. I like that label. Thank you.
Right. All right. Thank you so much. Great catching up with you. I'd love to have you on again when you get back from Europe, my friend.
Always fun. Thanks, Andy.
Thank you.